Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing two articles, to where the first one is titled, Palantir Technologies Inc., ticker symbol PLTR stock, sinks as market gains, here's why. We're going to be diving into their latest news updates, upcoming catalysts, and what we can anticipate as investors for their approaching earnings report. After that, we're going to move on to another article titled Palantir Stock, Bull versus Bear. So we're going to be going over all of the positive aspects of this company and some not so positive aspects that you as an investor need to be aware of. And if you haven't already invested into this company, then you should definitely be aware of the information in this video. So if you want more videos on Palantir Technologies and their PLTR stock, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with all of that being said, I say let's jump right into today's stories. Palantir Technologies, as you already know, is a big data and analytics company which serves both commercial enterprises as well as government clients. And in their latest trading session, Palantir Technologies PLTR stock actually dropped in their share price down to around $17.47, even though very bullish positive analysts, who are very respected in their field, believe this company could surge up to $25 throughout the year of 2024, and that's why a large majority of investors are pouring into this stock right now. Shares of Palantir have actually depreciated, meaning that they have gone down by around 10.3% recently over the course of the last month. And this actually underperformed the business services sector, which gained around 6.49%, while the S&P 500, which is a phenomenal stock market benchmark, actually gained 4.89%. So why is Palantir shares decreasing while other sectors as well as the S&P 500 are gaining? Well, here's what you need to know. Palantir is rapidly approaching their upcoming earnings report, and investors are getting a little antsy. Some investors believe it's going to surge after their earnings report, and some believe that it's going to flop. So let's see what analysts and investors think will happen to the overall share price once their earnings are officially released. As of right now, the company's estimating that their earnings per share, also known as EPS, is projected to come in at 8 cents per share on the positive side, which would equate to a 100% increase compared to the same quarter of the previous year, and this is very good news for the overall company. On top of that, we also want to take a look at their top of the line, which is their revenue projections, to where they are currently forecasting their net sales to come in at $603.48 million, which would equate to an increase of 18.65% from the year ago period. And again, this is not as bullish as some investors would have liked it to be, or would like this projection to be. However, with that being said, ideally we would want this to maintain above a 16% increase or a 16% CAGR, while the company slowly starts to come back and achieve a 25 to 30% CAGR from now until 2030, but I will be doing another video on that. So for the full year, we know that the consensus estimates project earnings of 25 cents on the positive side per share and revenue of $2.22 billion, which would equate to a 316.67% and a 16.5% change respectively on the positive side in regards to their top and bottom line. Overall, I personally don't know why investors are so scared and why they have been liquidating lately, to where the company's share price dropped over 10%, and even recently they've dropped by 2.22%. It really just doesn't make sense to me, because I think the fear that investors are experiencing right now are completely overblown. We also have very bullish analysts and institutions coming out about Palantir saying that it's a strong buying opportunity. For instance, Zacks Rank has a system where they will rate stocks on a scale from 1 to 5, with 1 being a strong buying opportunity and 5 meaning that this company is a strong selling opportunity in regards to their stock. But Palantir Technologies has a rank of 1, meaning that it's a strong buying opportunity. And when we look at the historic track record of these various ratings, we know that those companies who are ranked number 1 will achieve at minimum or on average a 25% CAGR in the year that they are ranked as number 1. And this means that investors could clearly see Palantir's PLTR stock go even higher. But the thing that investors are most concerned about is not necessarily their earnings, which would be their bottom line, nor their top of the line, which is their revenue, but rather the company's overall valuation. valuation, and here's what I mean by that. Palantir Technologies as a company is trading at a forward price-to-earnings ratio of 71.43, which signifies a premium in comparison to the average forward PE ratio for their respected industry, which is 26.47. And here's why this is a problem for investors. If you are investing into Palantir right now, it means that you could have a better opportunity elsewhere within the industry. So ideally, we would want this PE ratio to drop significantly, and preferably we would like to see it drop around or below 26.47 so they are competitive within their respected industry. But there is one thing to note here, and this is what I've pointed out a multitude of times. When we take into consideration Palantir's growth metrics as well as their PE ratio, then they are actually a better buying opportunity than the vast majority of stocks and companies in their respected industry. And here's what I mean by that. Instead of looking at only the forward PE ratio, we should actually look at the PEG ratio or PEG ratio. Why would we do this? Well, the reason for this is because the difference between the PE ratio and the PEG ratio is that the PEG ratio, also known as the PEG ratio, takes into consideration the company's expected earnings growth rate at the same time. And when we do that, we know that Palantir has a ratio of 1.2 when compared to their industry, which has a PEG ratio of 1.58. And ideally, the lower ratio here would be the best buying opportunity, making Palantir a better buying opportunity than their overall industry average. And that is my main perspective on this company, that yes, I know that the forward PE ratio or even the regular PE ratio or even their price to sales ratio may seem rather daunting because it trades at such a high premium, but when we offset this overall premium with the amount of growth that they're anticipated to have, then this company becomes a phenomenal buying opportunity compared to other companies within their respected sector or industry. However, you should know that if they do not meet expectations in their upcoming earnings report, then the stock will plummet very hard. However, I don't think that is going to happen. I think they will have a good earnings report where they will either meet or beat expectations. So with that being said, about their upcoming news updates, catalysts, and their earnings, let's go over the bullish positive case for this company and the bearish negative case for this company so you can have a fair grasp of the positive and negatives and the risk to reward when you're investing or thinking about investing into Palantir. The reason behind the recent volatility in their overall share price is because bulls and bears right now are duking it out on the stock market. So let's dive deeper into both of these perspectives to help investors see a balanced view of Palantir. Let's start off with the bullish positive case. As you know, Palantir is a successful software building company that has historically helped the US government to fight terrorism. They have launched a plethora of counterterrorism operations, and this is why I personally am invested into this company. I love what the company does, and I adore what they stand for. But that's not all. Palantir has also expanded into the commercial market by providing software to companies which will help that company's management make data-driven decisions. So ultimately, this will help commercial enterprises make their overall day-to-day operations more effective and efficient. On top of that, Palantir can even tailor their software to their specific client needs. And this has allowed them to access a variety of various industries to where Palantir could integrate their technology in a vast array of various commercial clients. And it's hard for these clients to change to a new provider once they have already signed up for Palantir, especially if the software functions as they expected, because Palantir software is just so integrated in the overall company's enterprise. So essentially makes enterprises reliant on Palantir's own technology. You should also know that Palantir tries to convince these companies to sign long-term contracts to where the average contract lasts anywhere between 2.8 years or above. And considering Palantir's amazing customer network, they continuously grow their relationships with their customers to help grow their overall business, which helps both their top and bottom line, while not only expanding their personal relationship with existing clients, but they also land new clients year over year. And I think this is a fantastic synergy because not only do companies use Palantir, once they start using Palantir, it's hard for them to replace Palantir because their day-to-day operations is reliant on Palantir's technology, and these customers tend to spend more money on Palantir as time goes on because the platforms just work so well. And we also need to take into consideration that Palantir is not only growing their existing relationships with their existing customers, but also continuously landing new customers as well. And since Palantir is well positioned to grow by adding customers over time, this acts as a strong tailwind for their overall financial results. We also see a huge surge in demand for their sophisticated data analytics and artificial intelligence technologies, which is being utilized in their artificial intelligence platform. So clearly it makes sense for investors to invest into this company before almost every single commercial client and government agency that is an ally to the West adopts Palantir's overall platforms. So Palantir has a clear long-term growth trajectory, and if you know me, I am a long-term growth investor. But now let's talk about the negatives of this company, because we want a balanced view. We don't just want to overhype a particular company. We want to be well informed on the companies that are in our portfolios. So Palantir has done very well over the last year. However, Palantir does seem to be very overexposed to their top 3 of their top 20 customers. And here's what I mean by that. Just their top 3 customers make up a wide variety of their total revenues. And with this very high concentration, this poses a significant risk to the company, because if they were to lose any of their clients pertaining to these 3 customers, or even any of their top 20 customers, it would be catastrophic for their overall revenue. For instance, if their clients reduced their engagement using Palantir's technology, if they terminate a contract, or if any of these companies experience major financial difficulties, they could end up cutting ties with Palantir Technologies, which would significantly impact Palantir's economic performance and their overall share price. However, I do want to point out that Palantir has also slowly reduced their dependency on their key customers, specifically their top 20 customers in regards to revenue concentration. So as Palantir continues to build more revenue segments and lowers their overall dependency on these top 20 customers, this is going to further diversify their revenue concentration and make them a more resilient company in general. Now, the biggest problem that bears and critics seem to point out about Palantir Technologies is their high valuation, which we briefly touched on in the last article. For instance, this is the perspective in which they come from. They say that the stock trades at a price to earnings ratio of 290, which is accurate. In the last article, we discussed their forward price to earnings ratio, or PE multiple, which was around 70. However, their regular price to earnings multiple, or PE ratio, is very high. And when compared to a technology giant like Alphabet, who is the parent company of Google as well as YouTube, their PE ratio is only around 27, and a lower PE ratio would mean that this company is a better buying opportunity. However, in my opinion, this is completely misleading, and here's why. Palantir is growing far quicker than Alphabet is, meaning that their PEG ratio, like we talked about previously, is extremely competitive even in regards to Alphabet's. We also know that when we offset any of their current accounting ratios with their growth forecasts, again, Palantir would come out on top. So when we compare companies like Palantir, who is a newer company that is trading at a future valuation, to a very well-known technology giant like Alphabet, we're literally comparing apples to oranges here. This is why I think the bullish perspective is far greater than the bearish perspective, making this a phenomenal risk to reward stock. And thanks to Palantir's very solid business model and their future growth prospects, this far outweighs any of the risks that the bears can think up for this company. So taking all of this into consideration, from the first article and this article, what does this mean for investors? Well, clearly Palantir has a very appealing business model that is centered around software provision and software platforms while utilizing artificial intelligence to make the day-to-day operations in government agencies as well as commercial enterprises more effective and efficient. This is going to increase their overall revenues, and as AI adoption and machine learning adoption increase, this will also help grow Palantir's overall platforms. Yes, the company does have a very heavy reliance on their top 20 customers, which does pose a risk for this company, and yes, technically, they are trading at a very high premium according to their current valuation. But when we offset that with their growth, and we also take into consideration the ability for Palantir to continuously scale their customer base, we know that these will go away. The company is also rapidly increasing their overall profits by hundreds of percentage points, and if an investor feels comfortable taking taking on the risks for this company, a long-term investment of no more than a 5% initial portfolio allocation if you plan to hold this company over the next 10 years would be a wise investment according to myself and these articles. But remember, we want to practice proper risk management, meaning that you would not overexpose yourself too much to this single company. With that being said, go ahead and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.